In this video, learn the tempting Tesla trade you must avoid if you want to be a consistently profitable trader. Watch at the1landspeed, the #1 trader at a prominent prop firm in back-to-back years, share trades that caused unnecessary losses in a recent huge Tesla trading opportunity and why. I'm Mike Bellafiore, and we're a long-standing proprietary trading firm in New York City with numerous highly successful traders, almost all of whom started their trading careers with SMB. All of us at SMB hope you find this channel to be a wonderful place for you to learn and grow as a trader.
So many of my followers have asked me to go into detail on some of my strategies and how I really dissect a chart and view this stuff. So here it is, the Tesla sell-off dissected, where I go through in December 22 how I view the Tesla sell-off and a very important lesson along with it. I'm Lance Breitstein, and you can follow me on Twitter at the1lanceB for trading advice and more. So sometimes part of being an elite trader is about the trades you don't take. So often when we look at our P&L, all we really see are the wins and losses. What's not seen there though, and is so often underestimated, is all the trades that are not taken, right? Because for every trading decision, there's probably 1,000 decisions not to take a trade. A system doesn't just help you capture wins. Equally important is when your system keeps you out of trouble and avoids setups that you're going to lose money in. And not just the trades that are not quite in your system, but all the ones that are close or similar to them. You need to be avoiding those in everything except for what's explicitly in your trading system where you know you have edge. It includes avoiding the ones that tempt you into leaving your lane just a little bit, and those losses add up when you lose them throughout the year again and again and again. So without further ado, let's dive into Tesla and why I consider a really, really good miss if you manage to avoid it. So this is a big picture chart of Tesla over like the last 4 or 5 months or so. And so when I look at this chart, I see a couple things. First, I'm kind of looking at the ranges, right? So in this chart, you can see that Tesla had about a 60-point range from 260 to 320. We break below that range. And if we break a range, I'm generally looking for, as a best heuristic, again, it doesn't need to happen, just it's my simple guideline, a symmetric down move. So sure enough, we do go 60 points lower to around $200. We fail to bounce, we break that range. The support of $200 then becomes resistance. And as we break lower, we then start to melt. This was coinciding with Elon Musk having a lot of just press and PR issues, where with the Twitter saga and buying out that deal, kind of some pretty crazy tweets, all while EV demand is slowing, needing to do the price cuts in China and the US. So Tesla started to take it on the chin. And I think many people, given how relatively strong this was and just what a high market cap, stable, well-loved company it was, many people were looking for the reversion trade given how aggressive this sell-off was, which we're going to then dissect even further. So speaking to the relative strength, if you look for the beginning of the year, not even the beginning, but like the beginning of the chart at least, Tesla was really kind of neck and neck with the Qs. And then if anything, Tesla started to hold up better. One of my funny ironies is I always laugh on Twitter about how at Traders for a Cause this year, I used it as the paragon of stocks relatively strong to the market. And that actually was the exact top where this started to then no longer be relatively strong and then relatively weak. And sure enough, we end up melting into year end while the Qs were relatively stable. So it's so important to know in your playbook, what do you want to see? As many of you might know, I do a lot of capitulation trading, which is kind of just mean reversion once something flushes out. But it's so important not to catch a falling knife or to time it correctly. You don't just want to be fading and fading and fading. And if you're early, a move like this can kill you. This can ruin your whole year. So what do I want to see in a capitulation, right? Everyone's different, but at least for me, I want to see multiple down days in a row. Ideally 3, 4, even 5 down days. And I want these down days to be getting way bigger. Another big heuristic is I want to see the volume sharply increasing. A real sign of capitulation is when you see the volume on the day do 2x the prior day's volume. That's really a great sign. Or you might have even noticed from a Carvana MSTR ARC trade that I've written up online, I love to see when a stock's doing a huge percentage of its float turning over because it just changes that cost basis. Another thing I want to see is no inside bars or periods of consolidation. So when you look at this chart on the left hand side, what you see I have circled is in those little yellow circles, what I call kind of inside bars. So in traditional technical analysis, a true inside bar is when the high and low of a bar is inside the prior day high and low. Some of these don't quite perfectly fit that definition, but in concept, it's kind of the same thing, right? Essentially, a day of price acceptance, a day where the range stayed very, very tight and mostly pretty much inside that prior day. And specific to these, we were at the low end of that range. And it's pretty fascinating that Tesla was making these 5, 6, 7% down moves. And then the next day, you wouldn't get any type of bounce attempt whatsoever. And if anything, it was just pure price acceptance. So that was a really, really big tell. So when I look at this chart, big picture, the move without a doubt is massive. We essentially saw Tesla go from really like 190-ish, 200-ish to 120 in a matter of a couple weeks. Unbelievable move. Certainly record breaking for that stock, I believe. Certainly it had been doing so well. But when I look at what I need to see in a capitulation, this was checking some of the boxes, right? I love how that this stock was relatively strong most of the year. I love that this stock is a super liquid, high market cap one. I love that this stock was covering a huge amount of range. But ultimately, though, we were doing a lot of things I liked, but not every box was checked. And particularly, the days just weren't getting bigger. The volume wasn't capitulating. And the multiple down days weren't all in a row. We just kept on getting those really pesky inside bars, which would show, to me, price acceptance. So now diving further into this. What we're going to do now is dissect what I consider to be the two places where I kind of took a stab, or where you could have argued, where I would argue the most acceptable places to trade this kind of were. And so keep in mind, those characteristics of capitulation that I really want to see, those are true on any time frame. In the absolute best of the best trades, we're going to get a daily chart that capitulates. And then within that daily chart, that intraday chart is going to capitulate as well. So that's what really helps me increase my odds. So now let's dive into 1222. This was kind of the first time where I thought there was a really interesting setup. Not that everything aligned, but we had enough where I could argue like this was kind of a spot to go for it. So what happens is Tesla makes one leg lower off the open. We then make a second leg lower with minimal bouncing, and then a third leg lower. So now we've covered so much ground intraday, and we've done so many legs in a row. And when it comes to capitulations, the way I view it is the more ground you cover and the more legs you have all in a row without a bounce, the higher the probability of a bounce becomes, right? It doesn't guarantee anything, but all I'm saying is that after the first leg is less likely to bounce than after the second leg is less likely to bounce after the third, and so on. So what we get is we get the legs moving faster. We're covering a lot of ground very, very quickly and at a sharper slope. And then, so after the fourth leg, which is a lot, I mean, that's very impressive to do all in a row right off the open, we finally kind of have a little bit of a wick. And then, as you guys all know, I'm a big fan of the right side of the V. What do I mean by that? Is if that's kind of the V going down, we finally start to put in a turn. And so that's the first place where I'd potentially buy. But then what happens is you then make higher lows, and then you make higher highs where I have that second yellow circle. And that second yellow circle to me is kind of really like, that is kind of the go big spot, right? So all the things in this favor is we make a massive intraday, multiple legs. We finally break that trend, and then we make a higher low and a break of higher highs, which for me is another sign of trend breaking. So that spot right there, after a really tight, nice consolidation, that is where I'd be putting on the size. So what happens? We don't get much follow through. We kind of sit around the rest of the day. So given that the daily chart hadn't quite capitulated for the reasons I discussed, I didn't love this setup. For me, I would not be convinced enough to overnight this at this point. What you could do if you want is give it to low of the day, as if you are going to swing it overnight. But for me, I just wasn't convinced. This was not, even though it was the right side of the V on an intraday basis. It was not the right side of the V on a daily basis. So this was not enough for me to want to overnight it. What happened later, though, is after hours, Elon went on Twitter Spaces, tried to reassure the market. So that's what that after hours pop is. And what happens is like that can make it really tough, and you can feel that FOMO. Like, is this what's going to change the sentiment of the stock? Is this what's going to do it? But ultimately, you need to try to stay just true to your system. And ultimately, that news gap after hours ended up getting faded the next day. So then the other spot I want to discuss is 1228. The sell-off had continued and the prior day closed super weak after a big down day. Then what happens is pre-market, we were gapping down. I think we were even touching like 104, 105 in the pre-market. And then we had a really big reversal. I think we went to a matter of 112, 113 or so. And that's a big signal. Now all of a sudden it's like, wow, that's very different pre-market character. So off the open, we try to make a leg and then we kind of fail. We go to right near those intraday lows and we just are sitting down there. The rest of the day, we kind of stay within the range of the day. And that day ends up being another inside bar, really, and another sign of price acceptance. So this was also quite worrying to me, right? And so now here's the one thing that I will say is kind of the pros for this stock that day. This stock ended up closing slightly positive on 12-28 when the market was really quite weak. So that was one potential plus. I liked that we had that pre-market flush out. And of course, we're just so oversold. So those are all the pros, but it still wasn't enough to kind of outweigh what I view was kind of just a pretty lackluster performance, right? That this couldn't gain any momentum. And so sure enough, as you can see from kind of that after hours and pre-market the next day, we did end up rallying overnight. But here's kind of my argument. What happened overnight is Tesla ended up catching an upgrade. Not only that, but that next day, the Qs were massively positive, and I think the Qs rallied 2.5% or more that day. So I'm personally a little skeptical of how far this stock would have bounced otherwise without that upgrade and without the market rallying. So overall, when we dissect all that, like, this was a very seductive trade because it was covering so much ground so sharply after being such a relatively strong bellwether. But ultimately, the daily chart never capitulated anywhere. The only kind of nice capitulation was on 1222, but we couldn't really gain any traction and the daily still just wasn't there. So that's kind of how I start to view these things and how I dissect these charts and some of the nuances that I'm looking for my system, which may be different from many others. Here's the takeaways. Like I said, the next day after 1228, we did end up doing a gap and rally, but I'm not sure it wasn't just because of the overnight upgrade and the NASDAQ rally. Would it have otherwise had a meaningful bounce? Not so sure. So really, I didn't love any place. If I had to pick one spot to have traded that, it would have been that spot on 1222 that I highlighted. So I ended up missing the whole bounce. I didn't, if anything, I went for a couple stabs, lost money, and I didn't make the bounce, and that's fine. The most important lesson is not being seduced by big moves that aren't capitulating and matching all the characteristics for your system. When you have those rules and those checks in place, those help protect you. And so really the big picture why I use Tesla as this lesson for you all is as elite traders, what we need to do is we need to develop a system with edge. We need to take the trades in that system, but even more importantly is not taking trades that are similar or not quite good enough for your system either. And then what's so important is the practice of measuring whether you're actually avoiding those trades and sticking to your lane. Elite trading isn't just about the big wins. It's also about the thousands and thousands of trades you manage to avoid over the course of a year that gets underestimated. I hope this video was able to provide you into a look of how I analyze charts and also how important it is to stick to your playbook and not get seduced by the trades that are close but not quite there. One of the best things of being an elite trader is sticking to your lane and avoiding all the rest.
Okay, do you want more actionable trading strategies from Lance to potentially grow your trading account? Well, watch How to Develop Winning Trading Strategies with Real World Edge from Lance appearing on your screen right now.